Let's get to our guest now. Paulius Kuncinas is Asia Managing Editor for Oxford Business Group. The economy is looking for drivers of growth, and it looks like the domestic picture is where it's at. What sectors do you see helping to support Malaysia's potential?
First of all, I want to say that Malaysia has done remarkably well. Forgetting the past performance over the last 5 years has been truly impressive. And I know that there's a lot of criticism about whether we're going to achieve the 2020 goals. But if you look at the macro performance, it has been outstanding, at least in ringgit terms. And I think the main challenge is now where to look for new sources of growth. Personally, I see great opportunities for Malaysia to play a regional role. I think it should continue to focus on trade, on exports. There are a lot of new markets opening up here in Southeast Asia. I think the next step should be on services. It's done remarkably well in manufacturing. It has a strong resource-based sector, even though it's undergoing through difficult times at the moment. But I think health is an outstanding sector because there's a high value to be created and there's a lot of demand for good health services. And here Malaysia is well positioned to serve the region. I think education is definitely one sector that belongs to Malaysia because of English language, because of traditions, and it has invested a lot in education in proportional terms. Again, there's a huge demand for good education services in the region.
There's still a lot of challenges, though, when it comes to shifting the workforce to a knowledge-based economy. What kind of hurdles do you see to achieving that kind of target?
Well, for sure, we need to identify more niches in terms of education. And we know what the roadmap is like. We know that we need to focus on high technology, on certain sets of skills, on entrepreneurship. The biggest challenge for Malaysia, it's still a government-led economy. It's very much state-owned, oriented. The private sector needs more oxygen.
So do you still see that crowding out of the private sector continuing?
For sure, for sure. And it's a difficult dilemma. I mean, even Europe and United States and even Japan is going through the same dilemma. If you step back too quickly, then the private sector may not perform. You need to support through fiscal stimulus. We have monetary stimulus. We need to force the banks to lend the economy.
But do we have space for fiscal expansion?
Right now, we're probably at our limits in terms of how much further, but in terms of debt to GDP, in terms of deficits. But for sure, through state-owned enterprises, through its role in the banking sector, the government will continue to set the tone. Now it's all about the smart moves. We've done the easy steps of infrastructure, of manufacturing expansion. So this is why I think services is the step. Malaysia, let's not forget, has just invested into amazing infrastructure when it comes to airport linkages. A new airport for low-cost travel, the biggest one now in probably the world.
And Malaysia, of course, is looking to be a regional aviation hub of sorts.
For
and
sure.
When we talk about challenges, there are, of course, certain factors still clouding sentiment, perhaps, although those seem to be tapering somewhat. Today, of course, with the 1MDB headlines we've seen, 1MDB has paid in full the fine owed to Bank Negara, and the transfer of assets is to take place by June of this year. From your point of view, is enough being done to ensure that confidence will be sustained in the Malaysian picture?
It is an issue that is very hard for investors to understand and get to the grips. One clearly positive message from the 1MDB story, that it's not going away. That means